Have you ever wondered how the most successful investor in history made his fortune? Well, his name is Warren Buffett, and his investment prowess has earned him a net worth of over $100 billion. He is considered one of the wealthiest people on the planet. But what makes Buffett truly remarkable is not just his wealth, but the principles and strategies he has used to achieve it. In fact, his investment philosophy has become so popular that he has inspired a whole generation of investors. So, if you're looking to learn from the best in the business and take your investment game to the next level, then you won't want to miss The Warren Buffett Way by Robert G. Hagstrom. The Warren Buffett Way by Robert G. Hagstrom is a must-read book for anyone interested in learning about the investment philosophy and strategies of Warren Buffett, one of the most successful investors of all time. The book is based on extensive research and interviews with Buffett himself, and offers readers a detailed and insightful look into his investment approach and decision-making process. Through the book, readers will gain a deep understanding of the principles that have guided Buffett's investment decisions, and learn how to apply these principles to their own investing activities. The book covers a wide range of topics, from the basics of value investing to advanced strategies for analyzing companies and managing portfolios. The Warren Buffett Way is structured in 5 parts, each of which covers a specific aspect of Buffett's investment philosophy and approach. In this video, we will explore the insights discussed in each parts of the book in detail. Part 1 of The Warren Buffett Way by Robert G. Hagstrom provides an introduction to Warren Buffett, widely considered as one of the most successful investors of all time. The section is divided into 4 chapters, which explore the essential traits of Buffett, his education, the formation of his investment partnership, and the creation of his holding company, Berkshire Hathaway. The first chapter focuses on the essential traits of Warren Buffett, which include his love of business, his ability to understand and analyze financial statements, his independent thinking, and his willingness to wait patiently for the right investment opportunities. Hagstrom emphasizes that Buffett is not only a great investor but also an excellent business operator who has built a conglomerate that operates across multiple industries. The second chapter explores Buffett's education, which began at an early age. Buffett was an avid reader who devoured books on business and investing. He also had a strong mentor in Benjamin Graham, the father of value investing, who taught him the principles of investing. Hagstrom emphasizes that Buffett's education was not just theoretical, but also practical, as he began investing at a young age and learned from his successes and failures. The third chapter discusses the formation of Buffett's investment partnership, which was established in 1956 with $100,000 of capital. The partnership was extremely successful, with annualized returns of over 20% for its investors. Hagstrom notes that Buffett's partnership allowed him to put his investment principles into practice and refine his strategy. The partnership also allowed him to build a track record of success, which would later help him attract capital and establish Berkshire Hathaway. The fourth chapter focuses on the creation of Berkshire Hathaway, which began as a textile manufacturing company. Buffett gradually shifted the focus of the company towards investments, using the cash generated by the textile business to acquire stocks and other businesses. Berkshire Hathaway became a holding company that owns dozens of operating companies, as well as a massive investment portfolio. Overall, Part 1 of The Warren Buffett Way provides a comprehensive overview of the early years of Warren Buffett's career and the formation of his investment philosophy. The section emphasizes that Buffett's success is the result of a combination of traits, including his love of business, his independent thinking, his focus on value investing, and his willingness to take a long-term approach. The section also shows how Buffett's investment partnership and later Berkshire Hathaway allowed him to refine his strategy and build a track record of success that would make him one of the most successful investors of all time. Part 2 focuses on the theory of investing and the principles that underlie Buffett's investment strategy. The section is divided into 4 chapters, which cover the theory of investing, the science of securities analysis, the art of stock picking, and the psychology of investing. The first chapter provides an overview of the theory of investing, emphasizing that successful investing is about buying stocks in businesses that can generate high returns on capital. Hagstrom argues that the goal of investing should be to find businesses that can compound their earnings over time and generate high returns on invested capital. He notes that Buffett's approach to investing is rooted in the principles of value investing, which focus on buying stocks that are undervalued by the market. The second chapter explores the science of securities analysis, which involves analyzing financial statements and other data to determine the value of a business. Hagstrom emphasizes that the key to securities analysis is understanding the underlying economics of a business and the competitive forces that drive its profitability. He notes that Buffett is a master of securities analysis and has a deep understanding of the businesses in which he invests. The third chapter discusses the art of stock picking, which involves selecting individual stocks that are likely to outperform the market. Hagstrom notes that stock picking is a challenging task and requires a combination of analytical skills and judgment. He emphasizes that Buffett's approach to stock picking is based on a few key principles, including buying businesses with a strong competitive advantage, buying stocks when they are undervalued, and avoiding companies with poor management. The fourth and final chapter explores the psychology of investing, which involves understanding how emotions and biases can affect investment decisions. Hagstrom notes that successful investing requires discipline and a willingness to remain rational in the face of market fluctuations. He emphasizes that Buffett is a master of psychology and has a deep understanding of how emotions can lead investors astray. Overall, Part 2 provides an in-depth exploration of the theory and principles that underlie Buffett's investment strategy. The section emphasizes the importance of value investing, securities analysis, stock picking, and psychology in successful investing. It also shows how Buffett's approach to investing is rooted in a deep understanding of business economics and competitive forces. Part 3 focuses on the strategies of investing and the practical applications of Buffett's investment philosophy. The section is divided into 4 chapters, which cover the tenets of investing, the selection of businesses, the management of a portfolio, and the importance of patience and discipline. The first chapter provides an overview of the tenets of investing, which include the importance of value, the focus on businesses rather than stock prices, and the avoidance of speculation. Hagstrom emphasizes that successful investing requires a long-term focus and a willingness to hold stocks for many years. The second chapter explores the selection of businesses, which involves finding companies that have a durable competitive advantage and a strong economic moat. Hagstrom notes that Buffett's approach to business selection is based on the idea of buying a wonderful company at a fair price, rather than a fair company at a wonderful price. He emphasizes that successful investing requires a deep understanding of the underlying economics of a business and the competitive forces that drive its profitability. The third chapter discusses the management of a portfolio, which involves balancing risk and return and diversifying investments across different industries and asset classes. Hagstrom notes that successful portfolio management requires discipline and a willingness to hold cash when opportunities are scarce. The fourth and final chapter emphasizes the importance of patience and discipline in successful investing. Hagstrom notes that Buffett's approach to investing is based on a long-term view and a willingness to wait for the right opportunities to present themselves. He emphasizes that successful investors must have the patience and discipline to hold stocks for many years and avoid the temptation to trade frequently. Overall, Part 3 provides practical applications of Buffett's investment philosophy and shows how his principles can be applied to real-world investing. The section emphasizes the importance of value, business selection, portfolio management, and patience and discipline in successful investing. It also shows how Buffett's approach to investing is based on a deep understanding of business economics and the competitive forces that drive profitability. Part 4 focuses on the development of Berkshire Hathaway, the holding company that Buffett has used to build his investment empire. The section is divided into 4 chapters, which cover the history of Berkshire Hathaway, the evolution of Buffett's investment strategy, the role of acquisitions in Berkshire's growth, and the future of Berkshire Hathaway. The first chapter provides an overview of the history of Berkshire Hathaway, tracing the company's roots back to the textile mills of the early 1900s. Hagstrom notes that Buffett began buying shares in the company in the 1960s and eventually gained control of the company. He emphasizes that Berkshire Hathaway's success is due in large part to Buffett's investment philosophy and his ability to identify undervalued companies. The second chapter explores the evolution of Buffett's investment strategy and how it has contributed to the growth of Berkshire Hathaway. Hagstrom notes that Buffett's approach to investing has become more focused over time, as he has shifted his attention to larger companies with durable competitive advantages. He emphasizes that Buffett's ability to identify undervalued companies has been the key to his success. The third chapter discusses the role of acquisitions in Berkshire Hathaway's growth, noting that Buffett has used the company's cash flow to acquire a diverse portfolio of businesses. Hagstrom notes that Buffett's approach to acquisitions is based on the idea of buying businesses that have a durable competitive advantage and can generate high returns on invested capital. The fourth and final chapter explores the future of Berkshire Hathaway and how it will evolve in the years to come. Hagstrom notes that Berkshire Hathaway's success is closely tied to Buffett's leadership, and that the company's future will depend on its ability to find a successor who can continue Buffett's legacy. He also emphasizes that Berkshire Hathaway's success will depend on its ability to adapt to changes in the investment landscape and to continue to identify undervalued companies. Overall, Part 4 provides an in-depth look at the history and development of Berkshire Hathaway, and shows how Buffett's investment philosophy has contributed to the company's success. The section emphasizes the importance of identifying undervalued companies, focusing on durable competitive advantages, and using cash flow to acquire businesses. It also shows how Berkshire Hathaway's success is closely tied to Buffett's leadership and how the company will need to adapt to changes in the investment landscape in order to continue to succeed. Part 5 focuses on the future of Berkshire Hathaway and how it will continue to succeed without Warren Buffett at the helm. The section is divided into 3 chapters, which cover the potential successors to Buffett, the investment opportunities that Berkshire Hathaway may pursue in the future, and the challenges that the company may face in the years ahead. The first chapter explores the potential successors to Buffett and the qualities that they will need to possess in order to lead the company successfully. Hagstrom notes that the next CEO of Berkshire Hathaway will need to have a deep understanding of the company's investment philosophy and be able to maintain the company's culture of integrity and transparency. The second chapter discusses the investment opportunities that Berkshire Hathaway may pursue in the future. Hagstrom notes that the company will need to continue to identify undervalued companies with durable competitive advantages in order to generate high returns on invested capital. He also emphasizes the importance of diversification and notes that Berkshire Hathaway may need to pursue investments in new industries in order to continue to grow. The final chapter discusses the challenges that Berkshire Hathaway may face in the years ahead, including the increasing competition in the investment landscape and the potential for economic downturns. Hagstrom notes that the company will need to remain flexible and adaptable in order to navigate these challenges and continue to succeed. Overall, Part 5 provides a thoughtful exploration of the future of Berkshire Hathaway and the challenges and opportunities that the company will face in the years ahead. The section emphasizes the importance of maintaining the company's investment philosophy and culture of integrity, while also remaining flexible and adaptable in the face of changing economic conditions. It highlights the qualities that the next CEO of Berkshire Hathaway will need to possess in order to lead the company successfully, and explores the potential investment opportunities that the company may pursue in the future. Ultimately, the section underscores the enduring legacy of Warren Buffett and the importance of his investment philosophy in the continued success of Berkshire Hathaway. The epilogue offers a brief reflection on the life and legacy of Warren Buffett. Hagstrom notes that Buffett's success as an investor can be attributed to his ability to remain grounded and stick to his investment philosophy, even in the face of changing economic conditions and market fluctuations. He also emphasizes the importance of Buffett's commitment to transparency and integrity, noting that these qualities have helped to establish Berkshire Hathaway as one of the most respected companies in the world. Finally, Hagstrom reflects on the broader impact of Buffett's life and career, noting that his philanthropic efforts and commitment to giving back have helped to inspire a new generation of investors and business leaders. If you enjoyed this video and want to learn more, you can find a link to the full book, as well as the Kindle and audiobook versions, in the description below. Thank you for watching. If you enjoyed this video, please subscribe to our channel to continue your journey on the shortcut to self-improvement.